Greetings, Dr. Jeffrey Scott. This is my weekend market update for October 16th, 2022. I titled this week, Next Leg Down on Tap, question mark. I could have said, did you enjoy that bull trap, or a number of other things. October 16th is the date, and my email address is hgsidoc@gmail.com. If you're new to my channel, hit subscribe, hit the alarm. You'll know when I post these. I'm erratic. I do them every weekend, sometimes Saturday morning, Saturday night, sometimes on Sunday. Rarely I'll do something intra-week when they amount to. I have an intra-week site, which I'll point out in a few minutes. Thanks to those who joined me over the weekend at the Wealth 365 event. A couple of key things. It's a great product. You see that I use it among others. I still use plenty of other products like HGSI, which I continue to love. And the best time of year to buy wealth charts is at those Wealth 365 events. If you like my tools and my scanners, some of them are part of the baseline wealth charts program. Some is an add-on package. If you weren't at the event and you're interested in purchasing them, if I know in the next couple of days I might be able to get the same deal as we had at the wealth event, but the company is pretty strict about discounts outside of the Wealth 365 events, but several people have asked, so I just wanted to get that in. Disclaimer, as always, this is for educational purposes only. Anything I recommend is a spirit of education advice, not investment advice. I'm a doctor, not a broker. I think the next comment's kind of a joke, but maybe it's time to put that back in after I've talked to a bunch of my friends how tough this market has been. I'm independent. I paid for all the tools that I use. I paid for wealth charts. I paid for HGSI. And trading involves risk, and you don't are solely responsible for any decisions you make. I do have a site. It's called stocksanddocs.com. Complete word, stocksanddocs.com. And that site I update every morning before 9:30 with a 8 to 10 minute video, which is sort of a synopsis of what I do on this program here. Just a couple comments on the December seminar. I'm having an issue with the December 4th date. I should know tomorrow where I sit on some of the alternative options that I'm looking at. And then I'll commit. No one's paid yet because I haven't let them pay yet. But we are pretty close to being finished on all the setup. I know about 5 to 7 people have let me know. That's great. Look forward to having you. I'll get back to you with the exact specifics. Hope to see you all in Florida in December, or as many of you that can get there, up to 15, because then it gets a little crowded in the rooms, and I like giving individualized attention. These are just 2 worksheets that I print for myself on a daily basis. They come out of HGSI because it really gives me a sense of what's going on in the market. The top one are the major market indices. The bottom are the top S&P sectors. And what I'm really looking at are a couple things. 5 and 1 day change. You can see over the 5 days, despite the massive rally on Thursday, everything was down except for biotech. The Dow Industrials eked out a small gain in the dollar. Commodities were down. Gold was down. Oil was down. The VIX was down. And if you look at the yellow, you can see the major market indices, the NYC Composite, S&P 500, the Russell 2000, the NASDAQ were all down 3% here. 1.1, 1.4, the NYC 1.4. So the Dow, the only thing that was up. If you look at Friday, you could see a bad day in general. And then as you look over to the right, and the thing that I wanted to highlight, because I don't usually do these salmon colored ones, everything in salmon hit a 52-week low on Friday. Diamonds, NYSE, spiders, IWM, Qs, and the NASDAQ. So they're all within 1 day of a 52-week low, as are TLT, FANGs, ARC, and Bitcoin. Over here you can see the small amount they've bounced off their 52-week low, but almost the entire market here is sitting on its 52-week lows. That is not a bullish sign. If we look at the sectors, you can see the only sectors up on the week were healthcare, staples, and financials. If you look at from 52-week highs, you can see how far off we are, ranging from 13% for healthcare, energy's down 14, and 41 on communications, 37 on discretionary. If we look at the week in Q edge, I look at this for probably three things here. Number one, I'm looking at this pattern and I can see we're increasing the percentage of stocks that are at the bottom part of their Bollinger Bands, and we went from 43% below the midline on Thursday to 62 on Friday. So we are getting to more and more bearish, but we were much worse a week or two ago. So even though the market's weak, we're not so oversold that a bounce is guaranteed. Sectors all were negative on Friday. 99% of industry groups and 92% of stocks were negative. And you can look that over the last month. You see the amount of red. Over the last week, it looks a little bit better, but it looked really awful on Friday. Awful unless you're short. Warehouse report gives me a sense of performance related to EPS rank, relative strength rank, group rank. 2 weeks ago, 1 week ago, this past week, here from the 8th to the 14th. First of all, everything is below zero, which means lots of losers. You look at EPS rank to performance, high EPS rank underperformed. High relative strength rank was negative, but it was better than low relative strength. Just a tough week all in all. If I look at the NASDAQ, this is looking for Hindi omens, which we won't see. But what I really like to look at is the number of percent new lows and new highs. You can see it's all red here. It's awful. And the weekly bongos are red. Nothing encouraging there. NYSE, same thing. Double digits, new lows, absence of new highs. Weekly bongo red. Nothing says a bounce is imminent there. Buckets, similar to what I showed you in the Q report. This is from EdgeRater. 62% of the S&P 1500 are below their midline. And you can see we've got some at the bottom, but this is what a reversal looks like. This is what 923 looked like, which wasn't even that long ago. 45% and 96%. So we're a long ways from so oversold that a bounce is inevitable. And then what I like to point out, even though in a bull market, which we're not in, this leads to a bounce right away. In a bear market, this is October 3rd, 6th, 7th, 8th, 9th, and 10th of 2008. Interesting, kind of matched up last week from a time perspective. And the point here is the market kept falling despite being massively oversold. Energy on the week, everything is red except for uranium, strong dollar. Even the OPEC pump starts to look like a dump where OPEC Plus has not been able to move the price up. On the metals, again, strong dollar, weakness except copper. Notice the Baltic Dry Index spot price has moved up. That could lead to some price increases and stabilization in the ZIMs and Starbulks and others, but still way off the June highs. Interest rates, as we know, the 10-year and the 30-year are sky high. We know that the yield curve is inverted. Over here is going back to the 80s, that every time you go from an inversion, you go to recession, inversion, recession, inversion, recession, inversion, recession, inversion, almost inversion, recession. Well, here's the inversion. What do we think is coming next, folks? Yeah, recession. Here's tightness of money. We're off our earlier of the year highs, but we are above the tightness seen in the markets at the end of 2018. What happened at the end of 2018? In case you forgot, the market sold off with a pretty quick reversal. Overbought, oversold, the number of stocks above the 200, above the 40, and the 12-week new high, new lows all improved this week. So even though it was a negative week, some of the breadth numbers improved, adding more credence to the we're not near an obvious bounce zone. Economic news, we have less big stuff this week, but we still got an important jobless claim. We got some housing builders. And I think these index things, I like to think that they're not going to be a big mover because they're looking out 5 to 10 years. But it'll be interesting to see what they project. Earnings calendar, this is also big news. Look at some of these. Bank of America, Netflix, Goldman Sachs, IBM, ASML, American Airlines, AT&T, Rail, CSX, Amex, Verizon, Schlumberger. Busy, busy, busy week of earnings as earnings season starts in earnest. Expected moves, I'll just look at the spiders. I'll tell you that everything finished within their moves, which means the market makers had a great week of making money. The closer they finish to the center line, the more money they make. Um, the NASDAQ finished at the bottom, but look at what happened. The market opened up on Monday, Tuesday, and Wednesday and drifted a little bit being the keyword lower. Thursday, we got the CPI. We opened and traded off hard down to this red line. Remember, it's open overnight. These are futures, so traded down after the print. And then we went to this massive, let's call it short covering or whatever rally, and we finished above the midline and then sold off on Friday. What a crazy week. Bad outcome. Despite record reversals on Wednesday, market sold off. Major averages are within a bar of their 52-week lows. News flow negative despite the rally, whether you look at PPI, CPI, or the Fed minutes. A lot of people, including myself, wonder what drove Thursday. Was it Bank of England, massive short covering? Who knows, but it was weird because good news has been bad for the market. The PPI was great. Market sold off. The CPI was great, and it actually the market went up, but all of it got erased on Saturday, at least, excuse me, on Friday rather. We're in an interesting area. We're near natural support. Although we're breaking down, we are oversold, but not as much as we were. My guess is we go lower, but we may bounce first. So essentially for me, it's hard to short off a support. It's hard to go long big because I still think we're going lower. So my plan is the same. I've got money to work. Keep it interesting. Small positions, small dollars, tight stops, cash level high. And I also recognize that when we get to the later part of October, we get into a seasonally strong, the best part of the season for the markets. So maybe we get a bounce then. And just to remind you, if I don't bore you too much on these calls, you want a short version, stocksanddocs.com. So you'll find that I spend more time on these presentations during times that the market is changing and less time when there's not a whole lot different to do. So this may be a short presentation. So this is how I use wealth charts. First thing I do is I update HDSI and I create from HDSI, MarketSmith, Investors.com, and TradeStation a number of watch lists. I then combine those watch lists and then I basically look at every one of those stocks to get a sense of what's going on that week. And then that is my top-down approach. I start with the market, the sectors, the industry group, the stocks. That's top-down. Bottoms up is when I build that list and I look at a broad base of stocks. That gives me a sense of what's going on. I then take one of those lists or several of those lists, put them into wealth charts, and then the rest of the week when I don't have much time, I do the analysis that I'm going to show you. So I've sort of integrated a number of programs, HGSI, TC2000, TradeStation, Thinkorswim, and Wealth Charts, EdgeRater into my workup. So I start on the hot stocks every day, just looking at ETFs, what looks like it's interesting on the ETF land, short the Qs and the dollar. If those are the hot things in the market, what does that tell you about the market? It tells you the market's in a tough spot. Then I go and look at the indices, and let's just blow up the S&P 500s. If you've been here before, you've been through this many times. And at first I used to think people were making fun of me because I do the same thing every day. And then I think they realize that's a strength. My analysis never changes. I do the same thing day in and day out. So if we look at an hourly chart, we can see what happened on Friday. And what happened was we went up in the beginning, so there was some enthusiasm. And these are the cash ETFs, so they don't have the pre-market action except for where they open. So we started the market. Here's where we ended. We gapped up at the open. The second bar was the high of the day, and we sold off the rest of the day on Friday. That's enough on the intraday. If I look at the daily charts, I'll see the same thing whether I'm looking at the spiders, the Qs, the diamonds, and that is that we regained on Thursday the June lows and lost them on Friday, regained and lost, regained and are sitting right above the June lows. The Russell is different. It hasn't gotten down. Let's go to the daily and broken the June lows. But the difference is, notice this white line, white line, white line. You don't see the white line here. So the spiders and the Qs, these are the pre-2020 bear market highs, are below the June lows. On the Dow, the June lows and the pre-bear market highs are the same. Interesting. And on the Russell, we've already broken down below the pre-2020 bear market highs, and the June lows are below those. So a little bit different there. If we look at the UVXY as a measurement of volatility, you could see we ran up to that 200 as expected and are stalling. Now, if we go back and look, you can see the 200 has been a problem for this instrument going all the way back to March. And this is usually when we start to get a market recovery. So we are at an area, this will be one of the pieces of evidence with the VIX up at resistance that we might be looking at. I've been talking for weeks that part of the problem with the market is a strong dollar. It really looks like a sideways move on the week. Let's just put a weekly up and see what the weekly did. Whoops, I don't know where I put a weekly. Over there. Let me change that to daily. Sometimes I forget to highlight what I'm looking at. And now I go to the weekly, and I bet we see a doji. We see a doji, and it was up 0.5% on the week. So dollar continues to be a problem. But you know what means that the dollar is strong? That when I go and look at commodities, and let me quickly make sure I've done my trade. Thinkers, my tasty works. Let's just quickly make sure that's up. All right, so I go into my commodities, dollar strong. Then that tells me gold weak, silver weak, oil weak, and natural gas, which is being whipped around geopolitically, extremely weak. If I look at the 10-year rates, the TNX, and this is a daily, you can see it's near the highs. What I pointed out at the wealth charts when I looked at this chart, again, I did it the same thing. Let me go and highlight this. When I switch this to weekly, and let's get it, that's April 18, let's get it down here to February. Okay, what I want to show you is when the rates are coming down as they were in here, is good for growth. When the rates are going up, it's good for value. When the rates are going down, it's good for growth. When the rates are going up, it's good for value. So what is the whole point of that? The point of that is to tell you, let me get this correct, that if rates are going up, then this curve is going up, and when this curve is pointing up, value is outperforming growth. Rates are going up here, folks. Value is going to outperform growth in that environment. Weekly market timing, you've seen this multiple times. It's how I like to look at the market. I look at two factors on each of the market ETFs. Very reproducible in wealth charts. In fact, I shared the chart during the event. Below the moving averages, which is a 30 WMA, or if you prefer an SMA, it doesn't matter. And a red weekly bongo is a no-buy zone. If you are going long now, like I said, I may have some long positions. You do it knowing that you are counter trend at high risk of failure, and you play small ball. That's my opinion, and I'm sticking to it. Market fibs help you predict where we're going. Look at this white line here. This was on the S&P, the February 2020 highs. It's an area that we consolidated on the run up in August, September of 2020. It's my next target. It's right in the neighborhood of 338, 339. It's been my target now for months. We've broken down, or at least struggling at the 50% retracement. If you're a fib guy, we come down here, which is where we studied up here. And then this is the full retracement, actually 78%. And then down here is that 100% retracement from the bear market lows. God forbid we go there. I'm still looking for additional pullback. On the diamonds, similar thing. The 50% is at 275. That's my target. Right now we are at a bounce area on both of these, sitting on that yellow line. All right, we look at the Qs. We've broken through that yellow line, and which is the June lows. And my next interesting area would probably be 257, which is a 61.8, and then this white line here, which is the highs before the market rolled over on the Qs. I'd have to go back a little bit to see those. Well, where's this white line misplaced? The white line may actually be a little bit moved up a little bit there. And then the IWM is sitting on the yellow line. 152 is my next target. So I'm bearish. And those who've been following me since the 2005, 2003 when I started this will know that's not usual for Jeff. But I've been bearish for a while, haven't I? So if I look at hourly charts, I look at what's working, IWB big cap versus IWM small cap. If it points up here, it favors big caps. If it points down here, it's small caps. Short term, we're favoring small caps. Here's another way of the growth versus value. If it points up here, it's growth. If it points down here, it's value. So right now, it's small cap value. If we look at the S&P sectors hourly in my ratio charts, my star candidates are energy, finance, and healthcare. Industrials doesn't look too bad, and maybe staples are coming on. But look how weak discretionary, utilities, real estate, technology, and communications are. Then I go into my scanners, and it's hard for me to recommend for you to go really short here, because even though I think the market's going down, I do think there's risk of a bounce. So let me just talk about a few of my ideas to the long side and also to the short side. So let's start with the heat map, and that tells me that the only thing that was working was banks and healthcare. Banks and healthcare, Citi, USB, Bank of America, Delta had earnings the day before. So then we go to sector scanner, and sector scanner says on one day it was industrials. On the week, it looks like industrials, finance, healthcare, and real estate was a surprise. And on a little bit longer time frame, even though it was weak this week, energy still has a strong weekly algo. If I go into Wealth Scanner and I look to see what's working, I'm looking here at just industry groups, the ETFs, the sectors, the markets, short ARKK, short Treasury, short the Qs, and the dollar. When that's your top four, you know it's not great. And the next thing is volatility, UVXY. Oil, services, energy, producers, gas are all up here, but look at how the numbers have dropped off from the 6 to 800. And then you got banks and biotech, usual suspects. Now, one thing you can do is you can say, you know what, let's look at the NASDAQ 100 as an example. Or, yeah, we could start with that. We'll be up here. What's really so the only thing that's really showing strength in the NASDAQ 100 is Gilead. And no surprise, Gilead's in an uptrend right now. It's kind of a loose uptrend, but it's in an uptrend. And if you look at it in the daily and the weekly chart, you've got a stock that's moving up. It broke above moving averages this week, had a wealth signal. It's an EMS buy. I've got no problem with that. I'm not sure it's at the opportune buy point, but that's the NASDAQ 100. I mentioned healthcare looks good, so I've got a directory of just, that's industrials, Jeffrey, just healthcare. Let's see if anything on healthcare makes it up on the list. So this is a way to ferret out things that might be outperforming. The bigger the list, the longer it takes. Now, there's no market timing in this and saying that it's breaking out today and it's time to buy it. What this is, it's the best performing. So, you know, to me, it's sort of a way of looking at relative strength. ATIS, yeah, things had a nice breakout. It's running and it's not that far off 100 on the high jump. Well, when I wanted to buy it, right about here. All right. So could you buy it here? Sure you can, but it's extended. URG, Eurogen, same thing. What a great looking stock. Here is your wealth signal. Here's your EMS. Here's probably the buy point in these couple of days. Look at the volume. Looks great. Can I buy it up here? It's already extended. Look where that high jump is. Right about that 100. Dice, another one. This one looks like a buyout. So this is telling me the best stocks in the market, but not telling me that they're all good stocks to buy. Now, NextGen, because it's got a flame here, I know it's had a big recent move. And if I look at the technicals, you could see that on the short term, it's really increasing its wealth signal score or wealth score. So when I look at the stock, it doesn't look like a chart that I want to buy, but it's interesting. It's had a big move up, but it's got to get above that resistance. So I don't normally do that. I normally stick here to my top-down industry groups because it gives me a sense where to go fishing from a top-down perspective. And at the end of the day, I'm a top-down trader. So then I've done that approach. I go to CAT scanner. Now I've already built a watch list. It's called Weekend Review, which has the best from my bottoms up and the best from my tops down analysis. And let's just take a look at what comes to the top. So the first thing that comes to the top here is Nutanix, Nutanix. And I believe it's in healthcare. So let's take a look at it. And this is extended by the math, but it's sitting right above the 200, so I wouldn't worry about the extension. I like this one. I might want to look a little bit at their fundamentals, but here's a stock that's in an uptrend, pull back to support, and on massive volume has a gap, a break on volume, a breakout of momentum. Flip the PSAR, the weekly bond goes green, the daily bond will turn green, and look at our relative strength in OBV. The second one, RETA, Reata Pharmaceuticals, looks similar, and this is how I found the stocks that I like. 4 dots, major volume to break out of resistance. Okay, ALVR I believe is a takeout, and let's see what it looks like. It's going sideways, which is what a takeout looks like. Delta had some interesting earnings. And their earnings were okay, but their projections for next year were great, as if the business travelers are coming back to work. I am a business traveler, and I am back to work, and I am back in airlines. So here we have Delta Airlines, EMS signal, a breakout and momentum, actually a volume and a breakout here rather. The momentum was back here. Relative strength OBV have turned up. That one looks interesting. I wish it didn't have all of it above it. JP Morgan had earnings on Friday. You'll notice that even though it says here just 3 dots, it didn't get to keep its gap dot because even though he's got a gap, he loses it here because he closed in the bottom half. But JP Morgan, Ping is a takeout. Wells Fargo is another bank stock. So the bank stocks gapped up on Friday, closed in the lower half, but they have been outperforming. And then there's WLK that I know got added to a major index. Big volume breakup, but failed to hold the 50. I'd probably watch it. Axosome is one that I've been in and out of, and I went back in. This is a stock that sold off hard over the last year and a half, but they just got a drug approved. They had some good data come out this past week, and you could see, are they done going down and moving up? They ended up getting a breakout in volume bar. The volume doesn't look like much, but compared to the left, it is higher, and OBV and relative strength are looking up. So the point here of what I like so much about this product is that I throw a big watch list at it, and the best things come to the top. Now, I might throw out healthcare and see, besides the first two, does anything else come up here? Because we said healthcare was looking good. Reata, Axosome, we already looked at. United Healthcare. United had its earnings and broke out of a downtrend. Huge volume, it's still below the 50. Less impressed. Avio looks interesting as setting multi-year highs here and breaking out. How many stocks are doing that? Look at the volume that came into Avio. It was a 3-dot volume move on Thursday, and unlike most stocks in the market, it kept going higher on Friday. I said financials looked interesting. Let's look at financials. What comes to the top? JP Morgan, Wells Fargo, USB had a decent day. These are all heavily sold off. It's hard for me to believe that the next rally can survive without financials. They got to start somewhere, probably worth taking a look at. And I said energy, actually industrials. So let's look at industrials and see what comes to the top. There's Delta, which we looked at. And then lastly, the energy, oil, gas, and coal. Nothing with 3. And then the other thing that I might look at that go long, which really is about shorts, is the contra ETFs. So let's look at the contra ETFs to see if anything makes the list. SDS, short the S&P 500, best looking chart I've shown you. Lots of volume, pullback, moved up on Friday. If you believe the market's going lower, you can buy short the S&P 500, buy long SDS. If you think semiconductors are going lower, again, you could see the impact of Thursday where it looked like it was going to be a bad day and then it came down in the market. So this would have traded down when the markets went up, recovered some on Friday. Short the Qs, SQQQ, a similar pattern. I just want to emphasize these are not investments. They're trading vehicles. They're vehicles to play to the short side. And if this market has a bear market, rip your face off rally, you'll get hurt. So be careful. TZA goes up when the Russell goes down. If you want to look at to the downside, you can just walk on over to my bear market scanner. And I've run my weekend short review here. And let's see where the most of the dots are. And there were some. Archel Daniel Midland. The agricultural world has sold off. This is one that hasn't totally broken down yet. But if this breaks below the 200, and especially if it did this, if it traded down, came back up, and here's the line, and did this, that is my favorite time to short. And I would be looking down here for some red dots, and I'd be looking at volume. So that's the opportune time to short. But I would say here, it's getting close. A breakdown below 200, I might be interested. You had a momentum breakdown with volume. That's a nice story if you want to go short. Ameriprise, this is insurer and financial services. Again, trying to break down. I'd probably let it come down and take out the prior low. Amazon, God, am I glad I got rid of my Amazon a while ago. Paid taxes, but taxes are a good thing. Amazon breaking down. Show me the support. Where is the support? There's no support anywhere close. I think Amazon, when this market recovers, I expect Amazon to do great. Still a great company. It's already sold off a lot. In fact, it's pretty poopy. That's a medical term, by the way, on its high-low jump. But I'm worried about Amazon. You can go down the list. BLDR is another one that is broken down here. Probably comes a retest down here at the minimum. So there are a number of plays to the short side and to the long side. I think the critical thing is to be careful. Be careful. This is not 2020 when after the market sold off, everything went up. It may not be as bad as 2008, but 2008 still was painful this time of the year as well. Very quickly, because people like to see them, I do have a list of stocks that I'm interested in to the long and short side. These are a watch list. They are not buy or sell recommendations. These are stocks that I am watching to give me a sense of what the market is doing. As I go down the list, let me show you some of my favorites. Bull is an IPO breaking out to all-time highs. Hard for me to know what's new and exciting in bowling alleys. Maybe it's just the idea that they're rolling them up. Uh, the entire energy shipping area looks interesting. And STNG, which is Scorpio Tankers, is breaking out here as well. It had a huge run up. Phil, this is one where my EMS indicator has been really accurate. And you could see you got an EMS buy over here. This one looks like it wants to go higher. See, what else did I like that were standouts here? Halo's a biotech stock that has a good story from a fundamental perspective, breaking out here already. Harmony, I don't know what they do from a biotech perspective, but they were very strong over the last month or so. And you could see on Friday, a weekday in the market, a gap on volume, breakout momentum, relative strength going exponential. That might be one to look at. Money management, LPLA, didn't have a great day on Friday, but had a great day on Thursday, gave up half of it on Friday. And then when I see things like short the Dow, a contra ETF to the Dow, making it to my buy list, it's down in the pattern, but as I've made very clear, I'm worried about the market. I have a similar list to the short side, probably not as long. And I don't go out and short everything, but it's giving me a list of things to pay attention to. And that's important to me. So some of them are listed here, and we'll see that despite the fact the market's been weak for a while, there's that AMP we looked at earlier. AVGO has been one of my picks during the week for shorts. It's just a gift that keeps on giving. At some point, they'll do what they always do, which is announce a great acquisition, and the stock will spike. Here's one that I just don't get it. CELH, Celsius Holdings, they make a drink that Pepsi and them did a deal. The stock ran up big time. I didn't get the run up, and it's been coming down hard. It's off about 30%. At some point, that might become interesting to the long side, but right now, it still has room to go. Things like HUBS are some of these software plays that they're not profitable, that are super extensive, and you see what they've done to date. But my question is, have they done it enough? And I don't know the answer to that, but these are stocks that, there you go, have had big run-ups, don't make money, and have they come down enough? And I don't know if they're done going down. They're still very expensive stocks, over $300, and back here we're looking at less than 100. So they've had a big run-up. Shockwave is another former leader. Will it reverse and go to new highs? Is this just a flat? Maybe. But like CELH, it's broken down. And, I was thinking this market would never get better until the big leaders rolled over. Well, these are the big leaders for solar. Another big leader that looks like it's rolling over. If you wake up tomorrow and CELH, FSLR, ENPH, SWAV are all moving up hard, then that tells you we got a rally coming, because they've been leaders, and true market leaders will pull back and will resume when the market turns around. Have an awesome, awesome, awesome week. Again, thanks to those who came to support me at the Wealth Charts meeting, and have an awesome, awesome week. Goodbye.